How to invest in farmland with a high-performing REIT. As the market has been volatile, many REITs have started the year the same. That's not the case with the one we're discussing. REITs are a sound investment and continue to provide significant diversification to an otherwise volatile market. Putting these income-producing investments in your portfolio can result in advantages over traditional real estate investing. Increased liquidity, great diversification, tax benefits, and potentially higher returns with less risk are some of their many benefits. Real estate investment trusts or REITs either own or manage income-producing real estate, generally through directly investing in properties or mortgages on those properties. The IRS requires that REITs pay out 90% of their income to shareholders, which is why you'll often see them paying out much higher dividends. This is generally far more than what the average S&P 500 stock pays out. One popular way to get the most out of an investment in REITs is to compound your dividend yield. Investors can also configure it so their dividends will automatically be reinvested and contribute to their portfolios. You have the option to buy REITs or invest in them through a mutual fund or EFT. They provide above average yields and can potentially give you more options down the line when it comes to investing. One potential issue for REIT investors is their sensitivity to interest rates. The chatter about future increases begs the question, have REITs performed when rates have been rising? I looked at 6 periods over 30 years in which the 10-year treasury yield increased. During these periods of higher rates, REITs generated positive returns 4 out of the last 6 times while outperforming the overall stock market. Even though their interest rates are rising, REITs are still trading pretty high. That's because their underlying real estate value usually increases during the bull market cycles. We've now proven that REITs can outperform the market in a rising rate environment. So let's look at one of the market leaders for this. Farmland Partners Incorporated, ticker FPI. Farmland Partners is a high-quality real estate company founded to buy and sell farmland in North America. U.S. farmland is one of the largest commercial real estate sectors, $2.5 trillion, and remains underallocated with institutional real estate investors. Agriculture is an industry essential to U.S. food security, muting long-term demand risk. Government and insurance programs provide relative stability to farmer cash flows. Farmland Partners' portfolio consists of over 186,000 acres owned and managed across the United States. They span 19 states with over 100 tenants, over 25 crop types, and 0 vacancies across the portfolio. Farmland Partners has beaten its trailing 4-quarter earnings by 6.3%, and analysts have boosted their full-year estimates by 3.8% in the last 60 days. This REIT has advanced over 18% year-to-date, which is higher than the general market. Based on that figure alone, the consensus estimate now stands at 27 cents per share, which would translate to a 2,600% growth rate from last year. With an earnings ESP of over 20% and an exact rank number 1, Farmland Partners profits for the next quarter are expected to be high, and there's a chance that an earnings beat will take place when they report on August 3rd. Keep an eye on this high-performing REIT and its performance during this rising interest rate era. I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. Stay safe, stay patient, and thank you for watching. Please check out my other videos and the description for great deals and sign-up bonuses. Peace.